Hey everyone, this is Zach, the broker of Zach Taylor Real Estate. Today we are talking about the minimum appraised value contingency addendum, or as a lot of people know, the appraisal gap clause or appraisal gap guarantee. What is that and how it's become kind of a modern phenomenon? This didn't happen years and years ago. This has really come about during the COVID plus era as far as an extreme seller's market. And what this is basically saying, hey, normally, if I'm getting a loan, I want to add an appraisal contingency saying, hey, I'm offering you $500,000, but the home has to appraise for $500,000. Well, now with this appraised value contingency or appraisal gap, what it's saying is, hey, even though I'm offering you $500,000, let's say, for example, the appraisal comes in at $475,000, I will cover that difference and pay you the difference at closing. So that is an option if your buyers have a little bit more cash on hand to cover that difference. So that's where this comes into play. It makes your offer stronger. And let's go ahead and go through this form and how it better relates to the purchase and sale agreement. So as with anything, TAR has created a separate form for this. It used to be a lot of buyer's agents would add something like this. Now, this came from the additional contract language provided by TAR. Also, that is another form. But you can pull this language. This is what people used to use. So in the event that the appraised value comes in below purchase price, the buyer agrees to pay up to blank over the appraised value, not to exceed the purchase price. Any such cash differential shall be applied to buyer's cash at closing. Now, this is what TAR first had until this became such commonplace in this market. And this form is a lot better used than the special steps. So let's go ahead and remove this and let's start using this minimum appraised value contingency addendum. This is a more complete version than just using the special steps. So what do? So buyer, we put our buyer's name. Let's say Susan Smith. Seller, let's say Jack Johnson. I'm just making up people. Jack Johnson. Let's say it's 123 Main Street, Murfreesboro, Tennessee, 37129. Now let's read through this real quick. This minimum appraised value contingency addendum between the undersigned buyer and seller is entered into and is effective as of the binding agreement date provided in the purchase and sale agreement for the purpose of changing, deleting, supplementing, or adding terms to the purchase and sale agreement. So let me pause right there real quick and better protect our agents. So when you're writing an offer and including this minimum appraised value contingency addendum, so you're adding this to the purchase and sale agreement. Again, these are two separate puzzle pieces, purchase and sale agreement, minimum appraisal. So we have to connect the two. So how we do that is exhibits an addendum. So we would put minimum appraised value contingency addendum, minimum appraisal value contingency addendum. And I am a really bad speller. Contingency addendum. Let's just make sure the wording lines up. Minimum appraised value contingency addendum. Minimum appraisal value contingency addendum. So those minimum appraised value. So those all line up. Now, secondly, here's how you write really clear offers and avoid any potential legal issues or trouble. So right here in the Tennessee Realtors Contracts, it gives you two options for the appraisals. This agreement is not contingent upon the appraised value either equaling or exceeding the agreed upon purchase price. Now you can land in some hot water, gray area, unclear if you check this, but then add this minimum appraised value contingency, because yes, it does say this is between the buyer and seller for the purpose of changing, deleting, supplementing, or adding terms to the purchase and sale agreement. And then it also says this addendum is made part of this agreement as if quoted there in verbatim. Should the terms of this addendum conflict with the terms of the agreement or other documents executed prior to or simultaneous to the execution of this addendum, the terms of this addendum shall control and the conflicting terms are hereby considered deleted. So I am not an attorney, and this could create confusing wording or situations if you check not contingent because you're banking on, hey, this says this can change, delete, or supplement the terms of purchase sale. What I recommend everybody to do is to not check this, instead check this box. This agreement is contingent upon the appraised value, either equaling or exceeding the agreed purchase price. And then when we attach that minimum appraisal, it says, hey, it does have to appraise, but only for this amount, not the full purchase price. This is the best practice. That way everybody is on the same page, that there is some sort of appraisal contingency. When you do this, you could get in very hot water legally, because again, we're not attorneys, but I suggest you do is contingent. It just doesn't have to appraise for the full purchase price. So let's jump back to our form and let's finish this out. So this agreement is contingent upon the appraised value either equaling or exceeding agreed minimum appraised value. So this is usually going to be less than the purchase price, because it doesn't really make sense to use this form if you're writing over the purchase sale agreement, because the normal contingency would be satisfied anyways. So we're going for something below the purchase sale agreement price. So let's say that's $500,000, and our buyer has the cash to cover the difference. If it appraises for $475,000, they can pay $25,000 extra to satisfy this contingency. Now, the best strategy for you to do, if a buyer is considering doing this, talk with your buyer about what they're comfortable paying the difference up to the purchase price, but also talk to the lender to make sure they still qualify. So let's say it's a $500,000 purchase price. They're planning on putting 20% down, which would be $100,000. Maybe it appraises for $475,000. Maybe they only put down 10% or 15%. And then they can come out of pocket the difference. But make sure with that lender, they're still going to qualify if they come out of pocket extra. Make sure they still qualify. Make sure they have the cash reserves. That is very, very important. Don't just attach this and the buyer talks to the lender down the road and then they're not qualified. So this agreement is contingent upon the appraised value either equaling or exceeding $475,000. If the appraised value equal or exceeds the agreed minimum appraised value, this contingency is satisfied. So now we're good to go. We're good to move forward. If the home appraises at least $475,000 up to or above. So if we write an offer for $450,000 and the appraised value comes in at $480,000, that means that the buyer is going to have to pay $20,000 extra towards their closing costs to the seller at the time of closing in order for the seller to still make the same thing as a $500,000 purchase price. The buyer's covering the difference. If it appraises for $490,000, then the buyer's paying $10,000 difference. If it appraises for $470,000, now we're under this. So the contingency has not been satisfied. So what happens? Well, if we're under $475,000, in the consideration of buyer having conducted an appraisal, the sufficiency of such consideration being hereby acknowledged, if the appraised value of the property does not equal or exceed the agreed minimum appraised value, buyer shall promptly notify the seller via the notification form or equivalent written notice. So now it is using the same wording that was originally in the purchase and sale agreement. So buyer shall notify the seller via the notification form or equivalent written notice. Remember in prior contract videos, written notice in Tennessee is not a text message. So we do not text the listing agent and say, hey, it came in under. We need to, in an email, you can do by mail. Most people do email or the notification form, and we need to notify them formally in the proper written notice that, hey, the appraised value came in under $475,000. Once you do that, buyer shall then have 3 days to either waive the appraisal contingency. So maybe the buyer has enough cash that it appraised for $470,000 and the buyer says, hey, we're good. We'll cover even more. We'll cover now $30,000 difference between the purchase price and the minimum appraised value. Or the buyer terminates this agreement by giving written notice to the seller via the notification form or equivalent written notice. Again, termination is not done through text. It is email, mail, fax, or notification form, which is the best. Upon timely termination, buyer is entitled to a refund of the earnest money. Now, an unspoken third outcome is the buyer and seller agree to lower the purchase price to the appraised value or a lower price that both parties agree to. So maybe the purchase and sale price is $500,000 on the contract. Maybe it appraises for $470,000, but maybe the buyer and seller agree, hey, we'll lower the purchase price to $490,000. So then the buyer is still out of pocket only $20,000. And that is actually less than if it were to appraise for $475,000, they'd be out $25,000. So it's a win-win situation. So that is an unspoken third outcome, is the buyer and seller can agree to a different purchase and sale value. or purchase and sale price. It can be what it appraised for. It can be somewhere in the middle. So that is an unspoken third solution. In the event buyer fails to either waive the appraisal contingency or terminate the agreement within these 3 days, the contingency shall be deemed satisfied. So if you wait till day 4 and say, hey, I want to terminate this agreement, you can't do that. You don't fall under this agreement. Now you risk your earnest money. Now you risk potentially being sued by the seller, specific performance. So that's a big risk. You have to follow your time frame. Once you notify the seller, hey, it's fallen short, it has not reached at least 475, we now have 3 days. Either agree to a lower purchase price, waive it, cover the difference, or terminate. And then this is very important, line 20. Thereafter, failure to appraise shall not be used as a basis for loan denial or termination of contract. So once we've known, hey, we've gone outside our 3 days to either terminate or agree to a different solution, day 4, 5, 6, 7, we keep going, and the lender denies it because their loan was contingent upon getting a good appraisal. Well, they haven't. They now denied the loan. You can't use that as denial for loan denial and get your earnest money back. So you got to be very careful. Sellers shall have the right to request any supporting documentation showing appraised value did not equal or exceed the agreed minimum appraised value. So it's good faith. Hey, it did not appraise for 475. We're terminating. It's good faith for the buyer to go ahead and share that appraisal report with the sellers. Nothing in this addendum shall be deemed to change the agreed upon purchase price. Buyer will furnish proof of available funds to cover the difference in purchase price and agreed minimum appraised value in the following manner. So it's really good practice as a listing agent when you see these come in, hey, that 25 grand difference, can we see some sort of proof of funds that you can cover the difference? That's really good practice before you go binding to see that, but it is in this agreement that within 5 days, you have to show us something. Should buyer fail to do so, seller may make written demand for compliance via the notification form or equivalent written notice. If buyer does not furnish seller with the requested notice within 2 days after such demand for compliance, buyer shall be considered in default and seller's obligation to sell is terminated. Failure to close due to lack of funds shall be considered default by buyer. So if the buyer has the funds up front, they show proof, they can cover the 25 grand difference, but then they go buy a $25,000 car after the fact, and now they don't have the difference. Well, the buyer's in default. So beware of that. Make sure your buyer isn't making large purchases while they're under contract. And then here's the final paragraph. Go ahead and read that. Everybody signs this. And again, make sure you've attached it in here to put the two puzzle pieces together. Yes, purchase sale agreement for $500,000. It is contingent upon an appraisal equaling at least 475. So that's what this whole appraisal gap phenomenon that has come about. Hopefully this helps you guys out. There should be a form. If you're not in Tennessee, maybe there's a form in your local state with your group of realtors. They have this form. This should help you out. This is how you write better, stronger offers. I always recommend, even no matter what the lender says, if they say, hey, we fully underwritten them, they are good to go, they are solid, this thing's going to close, I highly recommend with buyers, never just waive your appraisal. So if you need a loan, I always recommend throwing this in there because the appraiser, yes, they are licensed, yes, they are professional, but like any profession, just like doctors, there's good doctors, there's bad doctors, there's good realtors, bad realtors, there's good appraisers, bad realtors, or bad appraisers. An appraiser could come in and appraise this property for $200,000. And if you waive the appraisal altogether and didn't even use this form, the buyer just waived their appraisal. Well, now they're on the hook for an extra $300,000. So I always recommend, definitely use this. Always protect your buyers. If you need a loan, always, always, always look to include some sort of appraisal value contingency addendum, or it has to appraise for the purchase price. Always include this. Let's go ahead and jump over to TAR Legal Hotline, a good question that came up. Is the appraisal part of the inspection due diligence process? My client submitted a cash offer, but the seller will not allow us to get an appraisal. I do not see anything in the contract that would prohibit one. The answer depends on whether the buyer check the agreement is or is not contingent on an appraisal under 2C of the agreement. An appraisal is its own contingency and is not included with the inspection contingency. So if you waive all your appraisals contingencies and you get an appraisal within that inspection period and cancel because of that reason specifically, then you're probably not getting your earnest money back. The seller could sue. So what I don't like about this though is the seller will not allow us to get an appraisal. So even if you check on your offer, let's go up here. Even if you check, this agreement is not contingent upon the appraised value either equaling or exceeding the agreed upon purchase price. So seller will not allow us to get an appraisal. Even if they check no, it is under the buyer's rights that they should be able to get an appraisal just for informational sake. Yes, it's not contingent upon that, but I don't think there's anything in this contract, again, I'm not an attorney, but that would prohibit a buyer from just getting an appraisal for knowledge-based sake if they wish to. So I wish that would have been addressed, but it should be apparent that you cannot back out because of an appraisal issue during the inspection contingency and lump those together. It is its own separate contingency. So if you need it, check it. That's what I recommend with these. Hopefully this helps you guys write stronger offers, better protect your buyers, because again, if and when the market does start to shift, you want to include these and not just waive your appraisals altogether. That can really put your buyer out there on a limb. So hopefully this helps you guys out. If you have any questions, feel free to reach out to me below, and I'll see you guys next time.